There's plenty of interest. The issue is, I mean, I think generally the bankers are looking at the market in the same way that investors are in the value add space, and therefore there's a caution about vacancy or upcoming vacancy or the level of rents that are achievable. I agree with Diane that there's been something of a recovery in some submarkets in take-up, but I would argue that rents are still falling or maybe close to reaching stabilization in most submarkets, and I'm not sure when they're going to start rising. There's no real, apart from Paris, bless you, apart from Paris proper, there's no particular acute shortage of space. So, you know, with an average vacancy of 7%, which we would normally regard as roughly stabilization, there's no obvious driver for rental growth. And I think the banks see that in the same way as we do. So, yes, there are plenty of banks out there to support us, but they are very interested to look at the detail of our business plan about when we're going to lease space and at what rent and at what investment. Because, you know, I have to say, since we made our last investment in the Ile-de-France, in Puteaux, in the Paris-de-France market, with an average rent as we went in at around 420, 425, we're now looking probably at a value of perhaps 400, maybe even slightly less, and maybe those rents still have some way to fall. So not only are we concerned that when we finance new investments, we're also looking at who might take us out and what kind of finance they're going to be able to get, so that we can price the next buyer.
I think that there have been a lot of big changes, and all the banks have been following these new investors. Coming back to this very large transaction that happened this year, and the year is not finished, maybe, well, all of these transactions have been high leverage, so that's something which is completely new in the market, and most of them have been arranged by US banks. So, I mean, that's also something new, because of course there is a lot of, I mean, there are a lot of liquidity in the market, and when I say liquidity, it's mainly in France, the traditional German and French banks, but I mean, their capacity underwriting, with their capacity of underwriting, they can't underwrite very, very large transactions. So that's the first point. And they can't do very high leverage. So most of the German and French banks now are still limited to, I would say, 100 to 150 million capacity on a very good and core transaction, with a limited LTV of, I would say, 60, 65 LTV. So we've seen a lot. We've seen Bank of America on Cœur des France. We've seen all these new investment banks being very active in the market. So that's completely new. What is also completely new in the market since, I would say, 18 months, there have been a lot of development projects, which is also pretty new. We arranged, so far we've been arranging 4 development financing, so it means that there are some more. And 5 years ago, we arranged the only development program for efficient fire, and it was not so easy to raise some debt. But on the development project, it's already also the same. I mean, the LTV, loan to cost, is limited to 55%. So there is a lot of liquidity. Yes and no, there is, but it depends the typology of assets. It depends the size. It depends the LTV. So, but this is true that now you have. I think that German banks and French banks have been the leader in this recovery, but now they are going to have more and more competition. I'm pretty sure they are not aware of it, but I mean, all these debt funds, insurance companies, UK, we work a lot on high leverage with Paul from MNG a lot, which is, you know, which shows a very good trend of all these UK players who are willing to invest in France.
So I think, you know, we're looking at primarily Paris, to be fair, because it's liquid, and we're primarily in office, retail, and logistics that we're looking at there. As been mentioned, we've been looking at it because it has been stable, and when we consider other places that we also lend, which is Ireland, Spain, the Netherlands, these are different reasons why we're lending there, because that's more of a recovery play on those. So maybe we're lower leverage there, but maybe a little bit higher leverage here. But we're, it's just a wide variety of stuff that we look at. It's more deal specific, I would say, than actually, the desire to go into one region just to be there, just to diversify in there. So.